So it's good to have multiple time frame analysis, right? Like you need to be looking at the 4 hour for your main idea, and then if you're swing trading, if you're trading a little bit more like local, like to the time, like just to the session, then it's a little bit different. But if you're trading like for a swing trade, then what you're looking for is just either a failure or a gain at the end of the current trend. Everything is in like sections too, right? Like the section of this, like this is a trend right here, from here to here, it's trending down, right? Then this gained the 4 hour swing, and it gained it with a gap. So when it gains it with a gap like that, when it gains it with like a gap like this, that's signaling to you that this 4 hour order block is untested. So when the price comes back down to this level, you don't even have to be like fucking prim and proper on the levels, man. It's just like this area, when the price comes back down to this 4 hour area, right? It's not even proper. It's not even like, you don't even worry about how exact the level is or whatever. When this price comes down to this area, you're going to be interested in longs. That's it. You know what I mean? You just need to understand that, because because that's just what the trend is showing here, right? The trend is showing a 4 hour gain, right? A 4 hour gain over top of this, and it left a gap. It leaves a big gap, or you can use a volume indicator if you want, but I just look at the chart. If you look at the chart and you see a gap like that, there's a lot of volume that came in there, right? So like it's just the easiest way for you, a new person, to look at the chart and be like, there's an untested level there. You know what I mean? All right. So now that's the 4 hour idea. So on the smaller time frame, you're going to be looking at the 15-minute, and you're going to look at the area, right? This one's not even the best example, really. This isn't even the best example, but I'll show you. It still works. The price is coming down. It's in your area. Makes a higher low. You're still not even interested in. You're interested in just proper trading, right? So the proper trading is waiting for this to gain. This is the containment right here between this and this. So it's coming down. Not saying that it's wrong to take a you can take little stabs like this, because the stop is so fucking good, right? Like you can take a stab right here and put your stop here, because you're aiming for above the 4 hour, right? So it doesn't really matter. You could do that, but let's just put that aside. That's just a different kind of strategy. Let's put that aside for right now. Let's just focus on gains and losses, right? So the 15-minute chart has come down to the 4 hour area of interest, and now you're looking for a gain of this level right above the top of it, not even the bottom of it. It's real easy, right? It's real simple. Let's not make this difficult. Trading's difficult enough with the emotion that's involved. The level that you're looking for it to gain is this, right? You're looking for it to get closes above that, not just closes above. You need it to gain and create a fair value gap or an imbalance in the market. All right. So when did that happen? Let's have a look and see. Oh, here we started getting closes above this candle right here. You can see that right here. This candle started getting closes above. Then it continued higher. Perfect. It created a gap right here. You understand what a fair value gap is, or an imbalance in the market? When you see something like this, an imbalance at the level where it's gaining, that's signaling to you that that's an untested level. So that's signaling to you the next time that the price approaches there, you're going to be looking to enter, right? And what you're looking to enter in is this new order block that's been created here, right? This one between here and here. Since the bottom of it was tested multiple times here on the way up, you really want to be looking at the top of it. So The next time the price, you can see that the price is reacting like crazy to this level, right? So that's why it's reacting like that. So entry 1 could be there, goes a little bit lower, maybe a sweep of liquidity. You could put entry 2, or really you could have just put your entries right here and your stop below this. You know what I mean? Make it real nice and easy, because if the price starts challenging down here, these tested areas, it's probably going a lot lower. You know what I mean? So you want the price to hold up somewhere up in here, right? Because taking a little bit of liquidity and then moving is fine, but once you start pushing into like tested areas that are all tested, you know, the price is probably going to move a lot lower. For me, I would rather play it like this. I would rather play it entry here, stop here, and then if the price went down here, enter again, stop here. So two different kind of entries there. And then when you're doing your entries, the idea is the 4-hour time frame, right? Like the idea is not on the 15 minute, it's on the 4-hour, right? So if your entry was here, like your first target is going to be is not going to be until here, this swing, and then leave runners. I hope that made sense. You know what I mean? That's a basic breakdown, you know what I mean, of how I trade. I don't have a million setups that I use, you know what I mean? I use that. That's it. You know, don't complicate this more than it needs to be. You're talking about the like on a rejection of this, or sorry, a rejection of this, like these previous highs, like when it rejected here, or here. This is called a failure to lose setup, or failure to gain. This one's a failure to gain. In the reverse, it's failure to lose. This one's straight out of Dope's course, right? Like if you guys are interested in this kind of stuff, you should really take his course. But I know Donkey Trader already taken it. But this is the same thing, man. You would analyze this stuff on the smaller time frame. Sure, you can. So let's put it here. This is the area of interest. You know what I mean? So when it comes up here, you want to be looking on the 15-minute chart for entries. So literally the exact same thing, right? You're looking for a failure here, right? All right, trend's coming up, makes a 15-minute swing here, loses the 15-minute, has a close below, and closes below with a gap. You understand when I say gaps, right? Like this is like an imbalance in the market. The imbalance is happening at a higher time frame area of interest and at a loss of a swing here, right? So when the price comes back up here, you're going to be looking to enter on this swing, right? And here, because it's so close, you would just put your stop above, and you would be targeting down here for the first target, right? Very nice and simple, man. Nice and easy. So this is a short position. Can target this. You can put your targets in a couple different, or your entries in a couple different spots. You can put it at the start of the swing. You can put it at the start of this. You could put it. You can. What I like to do is layer my entry, right? So I catch like the whole move. I would put a small order here, and then I'd put a bigger order here, and then I would put a bigger order here, and then I would put a bigger order here, and then I would put a huge order here, and then I would put a fucking massive order here. That's how I would stagger these entries. So when the price comes up, you're gonna catch the whole fucking move. You're gonna have a great entry, right? Even if you don't hit your big ones, doesn't matter. You have a really great entry, right? And then as soon as the price dumps and loses a level here, you move your stop up to break even. You know what I mean? Until you hit your target. Then you move your stop up even more. Trail this shit, right? Trail it here. Like how I would do it is I would trail it here. Take one PT here, and then I would be trailing it up. It made new lows. When especially it makes a low like this. Makes a low like that. If you don't have closes below, if it doesn't have a close below and it's showing you a move like that, then that's a reversal sign, right? When it doesn't have a new, like when you're trending down and you don't have a close down here before shooting back up, then that's kind of a reversal sign. Like if you close the candle above the previous swing, that's a reversal. Like on the Bitcoin weekly, you can see it. Bitcoin made a new weekly swing high. It came down, held the lows here, tried to make a new high, did not, dumped, took the liquidity, tried to make a new high, and then it just had a wick, had closes down here. So like you needed to close above this. So without closing above that, that's telling you it's time for a dump. You know what I mean? That's how this works. Same with here. Look at this. So like, you know, we're trending down, and then a pump up. So you needed to have a close below this, right? If you don't have a close below that, then that's signaling to you that it's going to change direction, right? This happens all the time, dude. This is not, you know, this is not like new theories or anything like that. Like you either when the market's going down like this, this has to close below this. If it pumps up and closes up here somewhere, that's telling you, man, that they're trying to hold this level. You know what I mean? They're trying to hold it. They're trying to turn it around. So like you're probably gonna get a move like this. You know what I mean? Something like that. You know? Just very basic market structure shit, man. Like this is basic stuff. This is not difficult shit to think about. This is not hard, really, man. This is not. The market only moves in two ways, man. It's either going up or it's going fucking down. That's it. Even if it's going sideways slowly, it'll either be going up or it'll either be going down. Like even when you had this consolidation here in Bitcoin, it was still moving down. You know what I mean? We were making lower lows. We're making lower lows. Until this lower low couldn't close below this one. And they held previous low, last low. Like very like this is like the most generic stuff going, really. And honestly, you should trade like that. You should really try to make it as fucking dead simple as possible. The simpler you make it, the easier it's going to be, because there's no thinking involved anymore. It's just like, oh yeah, whatever the market says, whatever the fucking chart says, man. Anyway, I hope that helped, Donkey Trader. That's the best way I know how to break it down for you, man.